Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Happy Friday, everybody, and happy Good Friday. It is Easter week, in essence, and also Passover was on Monday, so I hope everybody is having a good holiday week. Well, as my title says, not only is it Good Friday, but we had a good week for interest rates as well. This week, rates did get even better than where they ended last week, and we, as I mentioned last week, we saw weaker than expected jobs number, and so that started a little bit of rally, and it did continue here through the rest of the week, which was a very good thing. And we also broke through some pretty important technical levels, which I'll talk about in a little bit later on in this. But we did see a very abbreviated week here with the holiday. Markets are closed today for Good Friday. They closed a little bit earlier on Thursday, and with Passover on Monday, probably also just less traders in the market. We did see less economic data released. Here was also a light week. On the economic data front, first of all, we saw the producer price index come in, and that showed that inflation ticked up a little bit. Producer price index measures inflation at the wholesale level. That showed an increase of only 0.1%, so it wasn't a real big movement, but just every little movement does help. Producer price index, though, is not closely watched by the Fed, but it did show an increase of 0.1%, both on the core and the headline number. We then also saw today consumer price index come in, and that is watched a little bit closer because that measures inflation to the consumer. That actually showed that there was a decline. The month-over-month consumer price index came in down 0.2%. The year-over-year number came in down 0.2% on the headline and 0.3 actually on the core, which strips out volatile food and energy. So it did show that inflation actually was less of an issue to the consumer. We also did see retail sales come in, and that showed a decline of 0.1%. So that could mean that we could see some weakness here in the first quarter of the year. So had the markets been open, that also probably would have been reacted favorably and from an interest rate perspective, what those numbers showed. But the market moved primarily this week due to a good auction. Comments by Yellen. She did speak, and she basically said that there was really no surprises there, so the market likes that, that Janet Yellen likes where the Fed is. They want to stay ahead of the curve, so there's no news there. But the major mover was that President Trump said that he would like to see interest rates stay low and believes that the dollar is too strong, and so would like to see some weakness in the dollar, which would be good for interest rates. And so that caused the market to rally, and we actually broke through some pretty tough levels of resistance that the market couldn't break through over the last couple of months. So if it stays here come Monday, that could show some continued follow through, and we might see rates continue to stay at these levels, because what has happened is we've gotten even close to these levels. Now we're even better. But over the last couple of months, we've gotten close and couldn't hold it, and then interest rates got worse again. So we've broken through some pretty tough levels, ceilings of resistance, and so that could be a good thing. If you have any customers that need any help, we're here to help. If you're working this weekend, so are we. So just give us a call if you have any questions. But good week for interest rates. Hope you have a wonderful holiday weekend, and we will talk to you soon, and happy Good Friday. Bye-bye.